I like how you whoop, whoop.
What is going on YouTube? It's Brendan from Market Makers. How did you guys like that intro? Awesome, right? Yes, those are real screenshots from our Discord. Those are members that took trades, and that is staff as well. They're screenshots. So if you guys want to come check out the Discord, it's a unique product in this space. It's a lot of fun. We do TA, trade signals, best of all, community. I think you'll absolutely love it. You can join for free. And of course, you get our Market Makers indicators when you join for free. All you need to do is check out one of our two sponsors, SimpleFX, a decentralized Forex exchange where you can trade all of the markets in either stable coin that you wish. And depending on what country you're in, you could even trade in fiat if you want to go through the KYC process. And of course, BingX, where you can trade all of the markets, traditional crypto exchange, and you get our unique Market Makers bonus. And we do have a private tournament starting on BingX on Monday. Top two prizes, guys. We have the $8,000 prize pool. Top two prizes are basically cash. You can withdraw them from the exchange as soon as you win. The other prizes can be used in any of your trades that you take on BingX. So check out our links. They're in the video description as well as the information. If you have questions, message Lee. If you want to join the room for free, download on our links, message Lee in the Telegram. That is in the video description as well. Hope to see you guys in a room. Let's get into this. All right, guys. So since my last video, New York Signature Bank obviously failed on this past Sunday. And since I made that last video, it officially became the third largest bank failure in U.S. history. Credit Suisse basically had a run on the stock, at least you could say, and they now have guaranteed liquidity from the Bank of Switzerland, the Central Bank of Switzerland, up to $54 billion. So we had this banking event occur in this space. Guys, this is all part of the cycle. This is not a black swan. This is totally predictable. And we have the S&P tracking 100%. In today's video, we'll go over the S&P, go over the VIX, going to cover Bitcoin, going to cover a couple of the foreign exchanges or foreign indices as well, such as the CAC, the French 40, and the DAX. And then this Sunday or my next video, I'll add the FTSE for the UK, I'll add the Netherlands index, and then probably ASX from Australia too. Okay, so I'll give you guys a full flavor. We got gold and silver on here as well. Let's go ahead and jump into the S&P. What am I expecting to have happen? Well, guys, definitely check out my previous two videos because a lot of people, I try to answer all the questions, as you guys know in the YouTube comments, but a lot of you guys are asking questions that happened that I answered literally in the previous video or the video before. So try to keep up with at least the last couple of videos so you can see what's happening here. But this is Y2K, the dot-com bubble on the left. And again, this is modern market on the right. I want to show you guys the candles. This is a weekly time frame on the E-mini. We're back testing the 50. Do you see exactly what we did? Back test it. We got it above the 50 slightly. And then this is a spring equinox in green, which for us is the next weekly candle. The Fed looks like they have cover now to raise at least 25 basis points because the ECB, the European Central Bank, went ahead and raised 50 basis points regardless of these bank blowups. So I think Powell has the cover he needs now to do at least 25. So how the market digests that, that's going to be the interesting thing, which is why we're going to look at upside targets and see where we could possibly rally to for shorts. And I can tell you right now, the NASDAQ, it's all about target selection, and the NASDAQ is setting up for a gorgeous short opportunity. So let's look at this. So we hit our spring equinox, and then we cratered, right? We went down 30+% on the sell-off. Spring equinox is next week. The Fed announces the rate hike on the 22nd, 2 days after the spring equinox. It's a Wednesday of next week. If Powell does 50, you have to remember, the market was pricing in 50 basis points right after those congressional hearings that Powell did, where he went up there and answered questions for the lawmakers, gave a speech, the market was pricing in 50 basis points, and then the bank failures happened. So then everybody's on TV, especially CNBC, which specializes in retail losing money. But everybody's on TV saying they have to clearly pause now. He cannot raise rates. He must pause. So obviously, if Powell doesn't raise rates and just does some speech about they're going to be vigilant and they're going to track inflation and just keep ahead by tracking the indicators and what's happening, that to me is actually a major sign of fear. If Powell pauses, you have to ask yourself, why is he pausing with the CPI at 6%, still 40-year high inflation, by the way? Why would he pause? And then on top of that, you had the core go up 0.1% last month. Again, core's been getting hotter. So you had the hot job numbers. Remember, all this was prior to the bank failures. That's why the market started to price in 50 basis points, because there's clearly more work to do, especially in a historical perspective. You've never had inflation get below the Fed funds rate. You have to get inflation has to be tackled by raising your Fed funds rate above the inflation number. So what they've been doing on this slow track, switching last rate hike down to 25, what they've been doing is just hoping, or switching to 50, is hoping that inflation will come down and slip under wherever that Fed rate's at, whether it's 4.75 or 5, and then be restrictive because they're accommodative unless they're on top of inflation. So could it come down over time? Yeah, sure. Do you want to wait that long? Do you want to wait another year, another 18 months, another 2 years? Meanwhile, remember what inflation is. It's compounding. So I heard somebody give a great example. Basically, everything that cost $1 in the US back in 2020, everything that cost $1 now costs $1.25 to $1.35 in real terms. We're talking about the actual prices. Remember, the CPI only went up to whatever it got to, 9.1, but that's not reflected in food prices. It's not reflected in energy prices. So everything's getting more expensive, and 64% of Americans live paycheck to paycheck. And according to the new studies, it looks like all that pandemic stimulus is basically worn off. Americans are stacking on credit card debt at record levels, all-time highs on credit card debt, and they're using their savings to pay for things. So all of this is negative. Guys, everybody says it's the Fed's fault. I'm not arguing that point. The Fed is slow, they're irresponsible, but whose fault is it really? In a bad relationship, the Fed would be like the abused housewife, the abused girlfriend, right? And the government is really the abuser here, because the Fed is the enabler. The Fed allows the government to spend too much money, do whatever it wants. Oh, just keep raising the debt ceiling and adding trillions and trillions and more debt. What does that do? It means you got to print money, devalues a US dollar, brings inflation up, and that's what we're suffering the consequences of. So is it the Fed's fault? 100%. But who drove the Fed, right? The Fed is a political appointee of the president, and we elect the people that represent us in all of the Western democracies. So we elect these people. So all these countries, look at it, EU, you guys have over 8.5% inflation. French inflation went up last month. So did German inflation. The UK is hot inflation. So you guys have to realize we're electing these idiots that make these economic policies. So perhaps it's more important to elect people that understand economics than maybe what their position is on a pregnant man emoji. Because we got a bunch of morons leading the countries worldwide. And I think all of you recognize that. So let's go ahead and dive into this just a little bit more. Again, if we backtest this 50, just like we did, we got above it here in Y2K. But as you can see, we were basically sitting on it and had our key pivot point. That's what we're coming up to, guys. I want to see where we can get to on the S&P. And again, we're looking at the S&Ps because it's got a $34-35 trillion market cap. It's massive. Looking at the VIX, guys, our channel is starting to open. Look where the candles are clustering. You got volatility here in the volatility, but the channel's starting to expand. And when this thing explodes is when you're going to see the S&P really dump. Looking at the S&P on the weekly, put the caterpillar on it, you're starting to contract here in volatility. You can see you're above the trend line here on this chart. You're below the 50 moving average here on the weekly. Again, you see that? So you're getting close to testing it. Now, what I think will happen is a rainbow, okay? In other words, we had this happen in Bitcoin before, remember? You make your rainbow up as the volatility expands, you'll get to some level, and then you'll just fall down. And this is when you'll really see the channel open up, okay? The channel will open up. So because price likes to move in waves. So you can push up, liquidate all of the shorts, stop out all the shorts, get that liquidity, and boom, and then you dump, okay? You're trading against the big money. S&P on a daily on our line chart, you can see we're approaching the spring equinox. Here you can see you got above the 200 here, and you can see that you're above the 200 at 39.47 at the time of this recording. You've had some volatility today. The markets are rallying a little bit. So this is all good. This is all expected because, Credit Suisse's stock after that Swiss bank bailout or promise to provide liquidity, I think it was up 30% at the open. So markets are viewing it like, hey, this isn't that bad. The Fed put in place, they basically guaranteed implicitly, they guaranteed all deposits in the country. It's basically a federal takeover of the banks, but they guaranteed all these deposits. And so now, now we have our bullish case to rally. And here's the 200 again. You can see it here, price pumping up above it. Looks like you got to about 39.60. Let me show you how I laid this fib out because this is showing some really key levels here, okay? Here's our 45 angle on the S&P. White line's the 200, okay, from Fractal Trade 15. Customizes all of our charts or all of our indicators for market makers. You guys check out his trading view page. It's awesome. Lots of cool indicators there. This is a trend gradient moving average. 45 angle price is just respecting this angle beautifully. Fell below it. So you got a couple of key things happening here. You see your volume. You finally got some 3 sigma volume to the downside, getting some average volume to the upside. Let's get rid of the volume. Let's clean this chart up and let's look at this. So price is moving up. Let's lay out our trend-based fib. And the way I want to do this, I'm going to do this from that Wyckoff pullback. Remember I had this in Wyckoff here. So from here, that low to that high, down to that low. And this gives us some really clear targets on the S&P. If this rally decides to continue going into the spring equinox, going into seeing what Fed Chair Powell is going to do on Wednesday, first thing you got to look at is your 45, which depending where this hits the 45 could literally be hitting it at a huge number here. 618 on the trend-based fib. On a 20 or 30-year study, the 618 and the S&P is most commonly retraced to fib. This is at S&P 4000. Okay, again, key psychological number. So at that 4,000 number, if you get up here, you're hitting the 618. You're basically could potentially be on the spring equinox candle at that point, and it's the 4,000 level of price. The next target I'm really looking at is 4052, and then the 1 fib, the 100% move. This is a geometric mean between the 618 and the 1618 at 4120. And also, what does that 1 fib do? If you do get up to that 4120, you're basically making your co-equal high here on the S&P. Let me draw it for you. So price would come up, do something like that. And then if it starts to fail at this pivot or before, remember our sell-off pivot, then you'd be looking at a move like that. And what does that look like exactly? It looks exactly like what we did in .com pivot. Hold the trend line. Remember the exact same identical bar count on these rallies, okay? The exact same identical bar count to Y2K. Bounces back up, makes your co-equal high, falls down 34%. We could be doing that exact same move here if we bounce back up and get up to at least that 4120 area, okay? So that's something really be paying close attention to. And guys, just understand the macro movements of this pivot that we have, like we talked about last time, spring equinox. Again, these are vibrational pivots in price. This is when price and time meet, potentially accelerate direction or reverse direction. If we come to the spring equinox and Powell pauses, I do anticipate that basing some type of rally for us to come out to our 43-day pivot, because these pivots, I've been over this the last 2 videos, so I'm not going to do it again. These pivots have been tracking beautifully since we've been in Wyckoff accumulation, providing you your tops and bottoms all the way through the S&P. So this is a very binary event what Powell does. 25 basis points, Have to see how the market digests it. 50 basis points, we're dumping. And if he pauses, I would assume a rally, even though in essence, it's actually very bad if he pauses because the Fed's worried about the economy. So this is what I'm looking at. These three key targets, guys, 4,000, 40.50, and 41.20, essentially. These three targets is what I'm looking at for price to potentially come up and make some type of bear shape if this rally is to continue. Let's look at our MFI. You can see made a little double bottom structure, money flow index, and our volume ratio has been bearish, trying to push back to the upside. Let's check out Bitcoin on the weekly. Bitcoin on the weekly, we've had a lot of volatility. I've seen a lot of information out there on social media and influencers saying this is exactly what Bitcoin was made for, guys. Exactly what Bitcoin was made for. Well, let me show you this first, and then I'll comment on that. So again, on the weekly time frame, you can easily throw this in Wyckoff. You made an up thrust outside of Wyckoff. We're going to zoom in to see where Bitcoin could get to if it stays bullish. But right now, you got an up thrust and you got rejected, and you can see how accurate this is tracking on your weekly. And this is going all the way back to June 13th, 2022. Now, I understand that argument, guys. I'm not a true believer in anything, especially like an asset class. I trade things to make money. I trade things to profit. And I don't care if Bitcoin goes up or down. I want to buy it when it's at a bottom and I want to sell it when it's at a top. Okay. But I'm just telling you based on my experience, and maybe I'm wrong, and maybe 75 years of market history is wrong for the first time ever. But when this thing goes, when the S&P truly capitulates and works its way down to 3,400 or 3,100, when we get that sell-off trigger, whether it's the rate hike or that 43-day pivot, we get that sell-off trigger, everything will pull down. And I do believe, despite what gold bulls say as well, I do believe it'll pull the metals down with it, just like it did in the GFC. Why? Because these bubbles are like black holes, okay? It sucks everything down. Things get liquidated when you need liquidity, especially if you're a large financial institution or a whale. You might have margin calls. You might be getting crushed in one sector, not so much in another. You got to take profits. So I fully expect everything to get cheaper this year. Everything. Some things will bottom and recover faster, but where prices right now across the board, Bitcoin, commodities, talking about gold and silver, and of course the equities will all get cheaper when the S&P and everything else pulls down. So nothing too exciting here on the weekly time frame. I don't trade on the weekly, as you guys know, trade on the daily, 8-hour, 4-hour. But what I'm looking at on the daily, guys, this is that exact same fib that I gave you on Bitcoin for that great 25-180 trade that, of course, gave you this nice 20-25% move down, had a nice bounce off the 200 here all the way up. And this fib is still tracking gorgeous, right? So we hit 26,264 on the fib. Where could this get to? If the rally continues, I would expect you to get to that target, the 1618, 27,821, okay? I would expect you to get there if the rally continues and the S&P can push up consistently and at least get to a co-equal high where it fell from basically 4180, where we shorted the S&P. These are massive trades, guys. We shorted the S&P at 4180, and if we can get to that co-equal high or higher, I would expect Bitcoin to come up, and we could always take a new fib projection as well. But this is just tracking so fantastic. And if the S&P starts to fail, if Powell does 50 basis points and the S&P starts to roll and the markets roll, well, then wherever Bitcoin's at is where it's going to roll from. Could get a little wave and then roll down. But this is my target if we still stay bullish at 27,821. If I wanted to expand this, the highest I would take this on this current layout is basically the 2.058, because that is the reciprocal ratio of 46, and that would be 31,180. For that to happen, I think the S&P would have to defeat that co-equal high. Okay, it'd have to basically get above 4,200, and then you could see Bitcoin going up to this level. Now, guys, these are all trades. Okay, these are all trades. Not buying anything. I don't own anything anymore. Got totally out of equities November of 21 with our 7-year cycle. Those of you that know, you know. It's the Shmita, but got totally out of equities. And so I'm not buying anything till everything craters and comes down because the economy is getting worse and not better. So these are all trades. So these are possibilities for Bitcoin to get to come back up 27,821, come up to possibly 31,180. But again, for that to happen, you would need equities to really rally hard. Now, the big trade that I'm really watching right now is the NASDAQ. Okay, a couple of reasons. This is a 3-day chart on the NASDAQ. Volume profile on the right. Look at your point of control on the volume profile. Lines up roughly with 13,056 on the NASDAQ. Now, I'll show you why this is interesting to me on the daily time frame. But as you can see, look at the shape on the 3-day chart. This is a classic double top. If you come up to your co-equal high, you're looking at 12,817. If Powell gets the markets bullish with whatever he does or his commentary with the rate hike, you could see this come up to between 12,817 and 13,399. Let's call it 13,400. That would be your 1618 target. So this is what I'm really tracking with the NASDAQ. And the key reason being, guys, here's your 45 angle on the NASDAQ. Here's your 200, the white line. Here's your Wyckoff range, right? Look what you did. You bounced off the 200. You closed on it or just above it, held the 45, got this nice bullish movement up now on the daily time frame. So this is really key to watch. And we can measure this a couple of different ways. You can take a tight wave projection here off this double bottom structure where you're bouncing up from. You can see your 1618 would land you right there at the 12,733. Your top of Wyckoff, which is 12,718. 2058 take you out to 1320. And of course, we can do our familiar structure here. Let's go ahead and do this. Click here, and come to our base. And you can see we could come up here to the 1272, 12,817, and the 1618 being at that 13,399. And my brightness went down. There we go. 13,399, just like the 3-day chart. Okay, so this is what I'm looking at on the NASDAQ. When you're trading, guys, it's all about target selection. Okay, so target selection-wise, held a bullish trend, coming up to at least a co-equal high, it looks like, right? At least a co-equal high. If the market stays bullish, and we have some clear targets in my mind between 12,718, which gets your co-equal high, all the way up to 13.4, and this would be a sweet trade if it comes up here, okay? If it comes up to this level, this would be really key to watch. We have the volume profile providing strong resistance as well, and I do believe nothing has changed in the marketplace. We have never in the history of the stock market had a bottom before entering a recession. So if the bank's blowing up, if you still think that we're not entering a recession, I mean, I think even the Fed may have to admit we're going to enter a recession. But if you still think that's not possible, that we're not entering a recession, then disregard everything I'm saying, but you're entering a recession. All of the leading economic indicators with a 100% hit rate tell you you're entering recession. So I'm playing this as we're entering a recession. So knowing that wherever we pump to, whether it's our co-equal high just below here or go to a new high, but just a new high in the range, not it doesn't defeat our August 22 high, come up to this new high. Well, guys, this is going to be an epic potential trade. So stay tuned to this channel. Watch these levels 13.4, 13K, and 12.8 to come back up into this range, okay? And watch and see what the Fed is doing all along the way. The Russell's not doing anything here on the daily. This is our excellent Russell short, as you guys know. Fantastic. What is that? 20% drop here we got on the Russell. Let's see what that is. 14.5% drop on the Russell at peak to trough. We're stacking candles side by side here, basically trying to make some type of accumulation range. So when I'm short, guys, as somebody that really enjoys the art of shorting, because it is an art form, it's a lot more difficult than longing. When I short, I want to short assets that are moving and pumping. You short as you pump up to key resistance areas. This has already dropped 15%. Can you day trade this inside here? Yeah, of course you could. When everything rolls down, if this hasn't moved, will this go down? Yeah, of course it can. But I'd rather short something up here like we did over here and get that drop combined with that potential secondary drop, okay? So let's go ahead and look at gold. But here's the gold targets that we were talking about before, guys. A 618, we passed our 1900, 786, 1926. That's where you pump to. 3-day chart, beautiful double top. Now, again, gold was a fear trade. People are afraid about the financial system, but gold in '08 and silver went down 34% and 61% respectively. So have to watch this. I personally would probably wait until to see what Powell does, okay? Because if Powell pauses, gold could rocket up. Because again, why would it rocket up? Because he's not raising rates anymore to fight inflation. I think it's going to be really difficult, guys, and we're definitely not going to see it this year. Inflation get down to 2%. If you study inflation historically, I'm not going to bore you on this podcast, but if you study it historically, it's extremely difficult. Played you that clip a couple of videos ago. Historically, out of 11 times when the Fed has had to raise interest rates to get inflation down 2%, unemployment goes up 3.6% throughout market history. That would bring our current unemployment level up to 7% just to come down to 4.4% inflation. You'd have to go to 7%. Okay. This was based on prior to this current inflation coming down to 6%. So just keep that in mind. So I think it's going to be really difficult. I think they'll get it down to a level. But guys, the Fed, if they do decide to pivot, because the market's pricing in cuts, if they do decide to pivot, they're not pivoting with the S&P up at 3,900 and change. That's not where that pivot's going to be. That pivot may be at that 3,000 mark or something, okay? So there's a lot of price to come down. And even if they do pivot, it won't change anything. The weakness is there. The fear is there. The stage is set, guys. Just be aware of this market cycle we are trading in. Looking at silver, again, you had that great trade on the way down that I've shared and beat to death telling you guys about as well. And we're looking at a potential double top pullback. You bounce back up to the 486 at 2209. Again, I would wait on silver just like I would wait on gold to see what Powell does, because if he does pause, if he does pause, you could see the metals move up and give you a much better trade entry, right? Let's look really quickly at the DAX. Guys, simple fib retracement from the high. As I told you last video, we shorted the DAX and the CAC in the room. Caught a nice drop here. You just raised interest rates. The European Central Bank raised it 50 basis points. On your pump back up here, you fell out of Wyckoff. On your pump back up here, you're just at the 382. I would wait and see if you can reclaim this. A key area of resistance would be the 618, 15,283. Also, that is your base of Wyckoff. So I'd be looking for a move, something like that. Come up here, test this, get rejected, and then potentially make a shape like a double top, something bearish. This is the daily time frame. Let's go ahead and drop this to the 8-hour really quick, see if we have anything different. And if we threw this, let's get rid of the volume on here. If we threw this, something like this, put this in a Wyckoff, mini Coff structure underneath here that you're doing right now, it would look like this. Okay, so you're just ranging. Got a little up thrust, came back down, retested your base. You would want to see a breakout. Let me get rid of this fib. You'd want to see something like this. If price gets more bullish, you want to see it come up, it'll pull back in typical equities fashion, Livermore pivot, and then break back out to the upside. That's what you would want to see. And you could see that on the bottom too. If you start making a series of lower highs, you come out, you pull back, and then you pivot back to the downside. Okay, that's what you're looking for here. But right now, you're just stacking candles between the Credit Suisse fiasco and just hiking 50 basis points. Looking at the CAC is really interesting to me. I read a lot of your comments, you guys that trade these indices as well, because you made a new all-time high by $10, right? You made a new all-time high by $10. You had this beautiful daily time frame double top print. I wish I had saw this when it made the double top. I got into it somewhere at the neckline here, and I posted the trade in the room. It obviously had a nice drop, and now you got a nice rebound here, right? So your rebound, again, you're looking at your neckline, 7150 is right at your neckline. So you'd want to see some movement up there and some rejection levels. But guys, even if I'm trading these other indices, I'm tracking the American SPX specifically, okay? Because that's going to drive the market. And if, as you guys saw with the bank crisis, where did it start? Started in America, okay? It's going to drive the markets. What happens here can spread around the world. Your markets may or may not dump as much. Some of your markets are going to dump more. And as a matter of fact, if you look at, I want to show you this on the DAX, and you can see it on the CAC too, but let's look at this. If we just threw, let me see if I have the 200 on here. I want you guys to see how much you outperformed. It's very important for you guys to understand that trade these markets, that trade the DAX and the French 40. these markets track very, very close. I would say at like a 95% level, okay, to the S&P. In other words, when the S&P rallied in October, so did the DAX, so did the CAC. Okay, they all rallied at the same time. They dumped at the same time. The key difference is you outperformed on the upside. Okay. Your upside rally was absolutely huge. So much so that your 200 is down here. That 200 on the DAX is at 13,830. Okay. 13,830 price right now is almost 15K. So you have to understand you got a lot more. Remember, the S&P's just got above by like 10 or 20 points above its 200 on the daily. So you have a lot more to potentially drop to catch up to the Americans once our indices really roll down and crater. So target selection, like we're talking about the NASDAQ. Why am I focusing on the NASDAQ? Because it's pumping and it's pumping hard, right? It's going to give me a higher point to short from. Same with the French 40, same with the German 40. Track these key things, guys, because if you lay over your S&P, lay these charts over on top of it, you can see the pivots happen almost maybe a week or two before or a week or two after, but the big rallies all have the same key pivot areas. And these markets, the French 40 and the DAX, rallied more significantly than the American indices, okay? And guess what? Your inflation's higher and your rate's even lower. I think that 50 basis points got you to what? 3% on your funds rate. So, yeah, definitely something to watch. Guys, hope you enjoyed the video. This one went a little long. I'll be sure to respond to all of you in the YouTube comment section. Definitely like and subscribe. Hope to see you in the Discord. Take care, everybody.